Today, crypto prices under pressure after the 4th of July weekend. Plus, struggling digital currency lender Vald gets a lifeline from its largest competitor. And we explain all the hype around the Polygon blockchain. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices dropping again. Bitcoin is still stuck under the $20,000 mark, falling about 1.5% in the last 24 hours. Ethereum also down, falling 2.5% to just under $1,100. Polkadot taking a big hit too, falling nearly 4% since noon yesterday. Okay, let's talk about today's crypto headlines. First up, crypto winter claims yet another victim. On Monday, cryptocurrency lender Vald paused withdrawals and trading as it explored potential restructuring options. Now, as it turns out, it only had to wait until today. One of Vald's largest competitors, Nexo, is offering a lifeline. Nexo is offering to buy Vald in an all-equity acquisition. And if that works out, Nexo said that it plans to restructure the company and expand in Southeast Asia and India. Nexo execs did not reveal how much the potential deal would be worth. Vald is based in Singapore and has gotten financial backing from Coinbase and Silicon Valley billionaire Peter Thiel. It's part of a growing number of crypto firms swept up in a serious liquidity bottleneck, the same one that caused Celsius and Three Arrows Capital to collapse as well. Next, eToro is no longer going public. The online brokerage, which offers crypto trading, just ended its merger deal with FinTech Acquisition Group. Tech news website The Information first reported the news last week, and today both companies made it public, calling the termination a mutual agreement. The deal was supposed to have been worth about $8.8 billion. And finally, England's central bank warns that crypto markets need tougher regulation to keep systemic risks from getting too big too fast. That's in response to the recent crypto crash that wiped out trillions of dollars worth of digital asset investments and the stablecoin chaos that caused Terra and Luna to crash. The Bank of England's Financial Policy Committee warns that as crypto becomes more and more intertwined with traditional markets, it increases the risks to the wider financial system. In a report out today, the bank said the crypto crash, quote, underscored the need for enhanced regulatory and law enforcement frameworks across the digital asset industry. All right, our main story today is about Polygon, the popular layer 2 blockchain, and its Matic token. The crypto industry is in a pretty rough place right now. All that hype around Web3 and the future of the internet that we heard about earlier this year is taking a backseat to headlines about liquidations and closures. Polygon, though, has been making moves. Last week, it launched a modular version of its blockchain on a test network, claiming that it can help solve problems with scale. Taiwanese smartphone maker HTC launched its, quote, metaverse phone, complete with Polygon support. And arguably most important, the company formerly known as Facebook, Meta, just began testing NFTs with select creators. And to start, those NFTs are hosted on the Ethereum and Polygon blockchains. CNBC's Tanaya Macheel took a closer look at how Polygon operates.
In the world of blockchain-based platforms, Ethereum reigns supreme. It's used for things like NFTs and decentralized finance applications. And now, a growing number of crypto projects are looking to unseat Ethereum and become the new network for big blockchain initiatives. These projects start from the ground up with a completely separate blockchain. Think of Solana. Other projects, though, they work alongside the Ethereum blockchain, and that's where Polygon comes in.
Polygon is a layer 2 scaling solution, and what that means is it's a way to take the limitations of Ethereum and make it more, make it cheaper and also make it faster so it can handle more transactions and more use cases.
These protocols don't look to replace layer 1 blockchains, but work alongside them. In this case, Polygon operates a secondary network on top of the Ethereum blockchain to process transactions faster, a lot faster.
Teams like Polygon said, okay, well, there are these limitations that we're already seeing with the network of Ethereum, but we still believe that that is like the core chain or ecosystem we want to build for. And so how can you take, the transaction limits? How can you take the speed? How can you take the cost and really make that lower while still, being part of the same ecosystem?
Ethereum can handle about 15 to 30 transactions per second. Polygon can handle around 65,000 per second. It also promises to cut transaction fees, also known as gas fees. Ethereum gas fees averaged $26 by the end of 2021. Polygon's fees were less than a fraction of a penny at that same time.
Fees are a matter of supply and demand. How much space, how much throughput is available on the chain, and how many people are trying to use it. Where chains like Polygon and Solana really shine is when markets are up, there's huge amount of excitement, and everybody wants to make transactions all at once. At that point, Ethereum cannot handle the load, which is why you see these incredible gas price, these fee spikes.
The Polygon blockchain processes transactions in batches, then sends them over to Ethereum, taking the workload off that network. And because Polygon works so seamlessly with Ethereum, developers can build decentralized apps on Polygon's network and still make use of Ether.
A lot of their growth has been very tied to Ethereum, but if you go and do some like analytics on chain, there is a significant user base that uses Polygon and does not use Ethereum. So over the past few years, you've seen a lot of growth that is not just converting Ethereum people to also use Polygon. And so I think over time, they become less reliant on Ethereum.
To that end, Polygon reported more than 19,000 dApps running on its network as of April. Oh, and it has its own cryptocurrency, the Matic token. Of course, growing macroeconomic pressures, fears of a recession, and slowing trading volume in crypto has led to a broad sell-off across digital assets, and that includes Polygon. The Matic token fell around 80% in the first half of 2022. But some say the network itself is well run and will weather the crypto downturn.
I think what we need to look at is like the activity of the networks and like how the ecosystem is growing and who is actually building on top of it. If we really want to project towards the future, it's going to be the chains or the infrastructure that's being utilized the most, where I think we're going to see the real staying power of those projects.
So if Polygon isn't looking to unseat Ethereum, what's the goal of the network?
My take on the long-term roadmap for Polygon is that they will move to being something that is multi-chain, more similar to Cosmos or Celestia or Polkadot. We saw them acquire all of these ZK rollup projects and all of these other sidechain projects. My take is basically that they are positioning to launch more chains in the broader Polygon ecosystem. And I think that's a really interesting play.
That's all for Crypto World. We'll be back for more crypto news tomorrow, so we'll see you then.